Well, today was not exactly a good news day with regard to the stock, but I promised them, Nicholas Gibbs, that we would find good news to talk about today. So hopefully you're not going to make a liar out of me. Did you see anything good today that I didn't see? I don't know.
I mean, did I see anything good today? Well, I saw some Fed speakers kind of change their tune a little bit.
Yeah.
So that was interesting. I think probably not a good thing, but I saw more announcements of layoffs, which further makes me think that the Fed is going to cut rates. So yeah, I think
Okay.
further confirmation for the economy. Maybe not specifically Tesla, but yeah.
All right. Well, so Tesla was beaten up today, and I did an entire video a little
Oh,
while
good.
ago. I basically blamed the press coverage. I gave a couple of other reasons why I think it was down specifically right now, but I think the press coverage has been really, really bad. The big three, the Chrysler, or rather Ford, General Motors, and Stellantis, pulling their ads from the Super Bowl isn't going to help the traditional media and their journalists feel very happy about Elon or Tesla. Do you think the media's content, their constant attacks, and their failure to cover the Cybertruck and the Optimus breakthroughs can be blamed for some of the recent flatness that we've seen in Tesla?
No, I don't think. I mean, I can understand why that's a point of view. Not in the recent. Okay, I do think that I am so against the Gary Black way of thinking as far as the media has no impact and the whole thing with ads and all that. I'm the complete 180 of that point of view. But I think the recent weakness has more to do with it being the turn of the year. You have hedge funds, portfolio managers, rebalancing, lots of things going on. I think the beginning of the year tends to be a lot of noise. So, and when I say beginning, I mean like the first month.
Right.
So, yeah, I don't read too much into it. It's just a data point, but I don't think it has. The business hasn't changed. There's no weakness for Tesla. Everyone else is dying. So, thesis continues forward.
Well, there you go. Well, that's why I have you on the show to create the good news. So I did happen to say, however, that I thought that there was no change in the fundamentals, only that I thought that the news coverage ultimately, I think it wears on the investors. So whether it's investors that are, in our community who are big Tesla, supporters, or whether it's the investors on Wall Street who are just trying to make sure that they got their portfolios the way they want them. In either case, if you're just constantly pounding on the company and on the products, and then when something good happens, you don't cover it at all. I just feel like that has an impact. And the last 2.5 weeks have been merciless in that regard.
Yeah, it's interesting. I don't think for most retail investors, at least the long term holders, I don't think the anything the media does or anything will change their mind, right? I do agree it can wear on them, and it can wear on anybody.
Right.
The ruthless hammering, but at the same time, to me, that's also kind of signal, right? When the most influential man in the world, and that's not just me saying that,
Right.
right? If you watch PBD, Pete David's, he just had an episode today where he's literally talking about the most influential people. Elon's number one.
Yeah.
That just tells you something, right? And so when the media is beating up on them, beating up on Tesla, beating up on the companies that he owns, I don't know. Sometimes it's just like confirmation that you're on the right side of things, that you're doing the right things. If we know that the media is corrupt, if we know that they say all these inaccuracies and a lot of incorrect things about Tesla, and we know Tesla better than any of them. If we know that they're that incorrect about just that, then we know they're incorrect about everything else, right?
Yeah.
Or there's a good chance they are. We don't know, but there's a good chance they lost credibility. So if they're going to go against Elon, against the Musk companies, and I'm in support of them, that just tells me at least I know I'm on the right side of it because I've done my due diligence. I've done real research. I've seen both sides. I've played devil advocates and straw man the other side's argument. And I come out on the side of the Musk companies and what they're doing.
Right.
So I don't know. To me, it's confirmation that I'm on the right side of it.
There you go. All right, that's cool. So I've heard from the comments that everybody wants more coverage of the other Elon Musk companies, and X was all over the news today. We had confirmation of peer-to-peer payments launch in 2024. We had 3 new content providers, Tulsi Gabbard, Don Lemon, and Jim Rome, all saying that they're going to start doing shows on X. We had that's right, left, and center. So you got the full spectrum there. We have Elon stating that 80,000 content providers were paid in 2023 and that the compensation will be increasing in 2024. We had a deal with Shopify to allow integration with X. We had a huge debate on DEI, the DEI idea that includes Bill Ackman and Mark Cuban that is getting tons of coverage in other media and seems to be resulting in corporations beginning to back away from DEI. Wow, that's a lot of news for one day on X. What do you think?
Yeah. I mean, I think for a long time, Twitter, former, old Twitter and now X, has been the place where a lot of these conversations have been happening and starting. But there's a clear accelerant, right? A very clear accelerant since Musk took over. And we are seeing that, before maybe some conversations happen there, now it's definitely the go-to place, right? Whether you want to see a debate between Elon and Mark Cuban, whether you want to see a debate about what's happening in Gaza, whether you want to have a, number one mainstream media broadcaster, whatever Tucker Carlson was, whatever the label is, now he's on X and getting way more views than he ever did, reaching a broader audience. And then to your point, the level setting, right? The commitment to being, the the town square, right? Which we see all perspectives, and having Don Lemon come on, who has not been kind to anything with Musk related, yet X reached out and wanted that, Don to come on there. And Tulsi Gabbard, I mean, I think you're calling her the centrist, but she's a Democrat, right?
Right, right.
So yeah, so for these people who say that Elon's alt right, this racist, this Nazi, xenophobic, whatever, it's like, come on, guys, this man is committed to what he says and he's delivering on it. But maybe it's just the drugs talking. I don't know.
Could be. It could just be the drugs. Well,
Elon's not me.
so the Consumer Electronics Show started up today. We've already had product announcements, including Honda and Kia, both on automobiles, new automobiles they're planning to do. Kia's actually got a van that they're coming out with. We have a truck from the Vietnamese startup VinFast. There are concepts. All of these that are been announced are, 25, late 2025, 26, 27, but they are concept cars and whatnot. So anything out there besides those, or did any of those catch your attention, or did anything you've seen so far coming out of CES go, oh my goodness, look at that?
No,
No.
honestly, yeah, no. Honestly, I think all these type of days, I mean, they're fun, but to me, they're like, how can I say this? It's like taking a school field trip to like a little science museum that has like a Tesla coil and you can touch it. It's like, oh, cool. It's like, yeah, it's interesting. But I feel like it's all vaporware. Like all these things, these concepts, everything. Like you can see something like, yeah, in concept, it looks cool. The idea has potential. But then you realize, okay, a lot of these things will never make it to market. Not a lot. Most
Yeah.
don't make it to market. If they do make it to market, they're a bastardized version of what they were. And when we see it there presented, whatever it is, it tends to be very sanitized, very, very honed in for a given presentation. And it's not actually what it's supposed to do. Right. So I don't know. I've just gotten kind of sick and tired of all of the promise of the future, and all these things that we see never come to fruition. So no, I don't know. Like I get it. It's fun. I don't mean to, be the Debbie Downer on all this, but look, when you're invested in a company like Tesla, when you have FSD, when you literally just drove 11.4.9 to the gym and back today from your house, zero interventions, doing amazing creep outs in very complicated traffic, going through construction zone. It's like that's real. That's actually happening, and that's an update that keeps coming out. Version 12, like I don't know. There's something about having tangible tech that is on the forefront of everything. Like ChatGPT to me is more exciting than the things we saw there. Putting
Right.
ChatGPT into a car, all right, like is that innovation? No, not really. Like you're all you're doing is adding a software to your car that already exists. Like that's not innovative. There's
But
nothing
but if they
innovative
put
about that.
but if they put Grok into the car, that'll be so much better.
I I also would not consider that innovative.
I'm
Like,
just play I'm just
yeah, no,
playing.
I know you are, but that's the thing. It's like people taking two things that already exist and putting them together. That's not innovation to me. So
So 17 years ago today, though, there was an innovation. And some people don't think about it only being 17 years ago, but 17 years ago, there was some little company that put out a new phone or something. I don't know what it was, but the Apple was introduced 17 years ago today at CES. And who would have thunk? Who would have thunk? And I think one of the major national electronic CEOs at the time, I can't remember who it was, said, "Yeah, they'll probably sell 100,000 of them."
is that where they launched it? Was that CES?
Yeah, it was launched at CES. Yeah.
Oh, I didn't actually know that that's where it was launched.
Yeah.
I remember when the debut. I mean, I've probably watched that video so many times, but yeah, that like rare, rare to see many things come out like that.
Yeah. Yeah. Well, I did an analysis that Tesla has the capacity in their factories right now to hit 3 million vehicles. And I've talked about that a little on the show. From what we can understand, the only thing that's needed to hit those numbers will be additional shifts, are starting up lines that are pretty much ready to go, particularly in Berlin and Austin. Do you think that number is reasonable? Why do you think the street and almost all the analysis right now, including my own, are way lower than that number? I'm at 2.35. I forget where you are. But we're way under that number. Do you think Tesla could ship a lot more if they just cared, if they wanted to?
So I'm trying to think. So you say 3 million.
Yeah,
So you're saying a million out of China,
yeah.
I
Plus
assume.
million one at least, and probably more like a million two to three.
Okay, so let's say a million three,
Okay.
because then I assume you're saying about 700,000 out of Fremont, which puts at 2 million. Where is the third million come from? How are you splitting Austin and Berlin?
Austin, 500,000 Model Ys and 100,000 Cybertrucks, and Berlin, 350, 400,000 Model Ys and or threes.
And just to clarify, before I opine on this,
Yes.
your point of view is not that they have that installed capacity today, but your opinion is they have the factory space. It's just a matter of adding lines, which they may be doing already, and we don't
Right.
know.
So we don't know exactly the level of the installation of the lines, but it was always planned to be 500,000 at Berlin. It was first phase was always planned to be 500,000 at Austin. And so I'm assuming that maybe the lines are more or less already in. But we know that they're only doing two shifts at each place. So they have two shifts. They can add a third shift and a fourth shift before even getting to another line.
Yeah, yeah. In that case, with that, with saying it that way, I do agree. I don't know if they have the lines in. I don't think anybody truly knows. Joe and Brian, they all do great work to monitor. So there may be, but they definitely have the space for it. That's for sure. I would say they have the space for more than
Right.
3 million personally.
Oh,
But as far as what I have a feeling that every myself included, that everybody's going to be wrong about deliveries in 2024 to the upside,
uh-huh.
substantially to the upside is what I'm thinking. I talked about this with you last week. You know, it's funny to see all the Tesla bulls, a lot of the YouTubers, a lot of everybody talking about, to your point, 2.2, 2.3. It's like, okay, well, they've consistently been on this 50%, CAGR,
Right,
right? They've been ahead of it since 2020. They're still ahead of it. Why all of a sudden are we saying they wouldn't be able to do that in 2024? Is it because all of a sudden we have this EV tax credit that's going to help at point of sale? Is it because all of a sudden we know that China is going to help stimulate more demand there because they have a big problem?
right,
Is it because we have, refreshed the Model 3, potentially Model Y? Is it because interest rates might be coming down? Are those the reasons why we would not continue? The only logical reason that people say this is because they think, well, there's only so many buyers in that price range of a market,
right,
and I would argue that all the price cuts that Tesla has done up to this point has actually kept the cars at the same price. It's just compensated for the interest rates.
right.
So if they continue to keep the cars at this price and interest rates come down, plus the point of sale EV tax credit, plus China stimulating more demand in China, I don't know. I see a recipe for a good potential upside, barring any screw up by the Fed that puts us into a recession.
So what do you think Tesla will guide to?
What do I think? I think they will probably say that they will continue to aim for 50% year over year. Some years might grow faster than others, but yeah, I think that's what I don't think. I would be surprised if they give an actual number, to be
Huh,
honest.
because
I know
last
they did last year.
it's
They did last year. They said 1.8. And then Elon was like, maybe if we work really hard, we can get to 2 million. I have a feeling they're not going to give a number.
so Jeff Lutz suggested they might give another range like they did last year, and he
Mm.
was suggesting 2.2 to 2.5. I would love that. I think the market would love that particular if that's what they ended up doing, I think that would be positive.
I agree. I agree. I like that. I like that idea by Jeff because that encompasses, I think, that 50% continued
Right.
growth, right?
Yes. Well, almost
Yeah.
at 2.53, I think is where that
All right.
would have to be.
Semantics.
Yeah.
Well,
So
we'd actually still. Well, no, never mind. Go ahead.
So while we're at it, since you and I talked last week, there's been, I don't know, 3 new videos about robots, at least, not counting all of the videos that I've done with Scott and with others, and Scott has done with others, and so many videos, it's almost impossible for me to even watch them all so that I can keep up with it. And so having all of that information now that we didn't have a week ago, do you have an opinion now about, do you think we'll have 10,000 or less in 2024 that'll only be for Tesla factories? Do you think maybe 50,000 or less with deployment to Musk companies and maybe some suppliers? Or do you think maybe we'll have 50,000, more than 50,000, and start offering them out to customers outside of the Tesla world?
Yeah, great question. Um, First of all, shout out to everybody who's making the bot videos. Seriously, great work going out there. We don't have too much details on this subject about what's happening in house, but the amount of being able to extrapolate from the little nuances that we see in these videos and just in depth of thought that we're seeing is I mean it gets you pretty excited, which is obviously why you're asking this question. um yeah, so again, shout out to them, to all of you, but I don't think it changes my opinion of it. I think that this year is still about training. I think it's about figuring out the actual manufacturing line. I think they'll probably build, maybe a few hundred, maybe 1,000 this year. Um, I don't think what we saw this version 2, I don't think that will be mass produced. I think there's another version that will come out. Um, and really what's leading me to think that is or the feet themselves. Um, I think that there will be another version, and then that will be the version that gets mass produced. And I think at that point that'll be 2023. Um, I'm with you though. I do think there's a chance that of these hundreds or a thousand or a couple thousand that they make, I do see them going to their, choosing a handful of tier one suppliers that maybe they start training with it. But I think I think we will eventually see a video, a demo, something of Optimus working on a line for the unbox method.
Mhm.
I think that's what they're working on, tightly, coupling those two together. Because if you're going to be making a production line for the unbox method, you, you want to think about it from a Optimus point of view, not from a human point of view. If we're really trying to, go next level here, and so that's what I think. I mean, that's my opinion. No one really knows, but I
Right.
just I just I just want an AI day. I just want to see what they've been doing,
Yeah.
and no more of these teaser videos because man, they're teasing us.
They are definitely doing it. Well, so now if we change to the general economy, in the last week, I have slipped into the 50% chance of recession camp. I was already, I know, I was spooked at the end of 2023 when literally no one was calling for a recession in 2024, because that's always a sign. And when everybody's on one side, I automatically go, wait a minute, what is everybody missing? So since then, there's been quite a number of data points that are starting to get in the way of my optimism, especially when we get to quarter three, because in quarter three this year, we had a 5.2% increase over the previous year. How do we get above that 5.23? So I'm about 50% of the way, or let's just say it this way. I think there's a 50% risk right now that we're in recession in quarter three, which may spill over into quarter four. Where are you in all this?
All right. So interestingly, my opinion has also changed about something. I'm still optimistic we're not going to go into a recession because I'm foolishly optimistic that the Fed will not screw up again.
I see. Okay.
Um, so in this last week, we've seen a lot of information. Literally, when I woke up this morning, I think there's like 4 or 5 companies that were announcing layoffs.
Yeah.
The Fed sees that. Um, we've also had, I think last week, one of the Fed members say that you know we're not ruling out hikes yet. There's still potential for another hike. That had so much water thrown on it. Today, we had another Fed member say that you know they could see cuts this year. Continuing that. If we see CPI on Thursday come at 0, right? So year over year,
Oh, zero.
so last year was 0.1,
Yeah. Yeah.
right? This time, January, the month over month was zero point 0.1.
Yeah.
If we see 0, which would be great because that means we go from 3.1 to 3, I'm in the I'm in probably the March Fed rate cut
Uh-huh.
camp.
Uh-huh.
Let me explain why.
Okay.
Because when we get to February, we're going to be lapping a zero point 0.5 month over month CPI reading. If we come in at 0 this month, which would be reflective December, odds are we'd be at 0 or 0.1. That would put us well into the twos.
Right.
The next month after that, which would be reflective of February, we're going to be lapping a zero point 0.4 number.
Mhm.
Again, if we do a 0, a 0.1, a zero point 0.2, we will be at 2%
Right.
for year over year
And heading
and
lower.
and heading lower. And at that point, that's almost a crisis mode for the Fed because now we see the stop sign. We are clearly feet away from it, and we haven't even started to take our foot off the accelerator.
Yeah.
And
Yeah.
they're going to slam on the brakes. And this is why I was telling you before that when they cut rates, I anticipate it being a little more aggressive than what people think.
Wow.
So, anyway, so long winded, but to say that if we see a 0, that shows us that we're kind of on this steady state of no inflation month over month, and we're
Mm.
going to be lapping some really big numbers, which will get us to 2% a lot faster than people are anticipating. And the
Right.
Fed, in my opinion, will want to act sooner than later, even if it's just 25 basis point cut. it would signal to the market that they're taking it serious and they're letting off a little bit.
Well, okay. So on that note, earnings start Friday. What are you thinking happens with earnings and also, even maybe more importantly, guidance?
I think everybody's going to guide bad. I don't think anybody's going to guide optimistically. I think you'd be foolish to guide optimistically right now, which is one of the reasons why I hope Tesla does not give it guidance on vehicle deliveries.
Okay.
I truly believe in life in general, under promise, over deliver.
Uh-huh.
Um, and I think if more companies start to eat, and I don't think they're just going to be under promising. I think companies are actually hurting, hence the layoffs. And you're seeing it in multiple sectors, not just tech anymore. You're seeing it, go everywhere, all throughout the economy. But I think companies are hurting. They're gone are the days where we can compensate for growth and earnings by putting it on the consumer.
Mhm.
Those days are gone. Consumers are saying we're done with this. We can't afford this anymore. We're either not going to buy, or we're going to find cheaper options, or we'll just stay home. And so companies are in an interesting and are in an interesting place now, where now it's going to have to be driven by efficiency or demand or volume, and we're just in this weird place. But so I think earnings may be okay right now, but I think guidance is not going to be great, and the Fed will see that, and that'll help the narrative of inflation is easing. The Fed has done their job, and they should probably be cutting.
I know my audience has heard me mention this before, but I'm not sure you and I have discussed it. One kind of those things that started wrinkling, getting into my craw was where that major, I can't remember whether it was Kroger or who it was, but one of the major national grocery stores told Pepsi too high.
Oh, Carrefour.
Okay. They said, we're taking you off the shelf.
Yeah.
We're not going to agree to your price increase. That was pretty significant.
Yeah, that was Carrefour. They're a big European grocery store. I don't Are they stateside? I don't know, but you're right. They took them off the shelf, and there's a debate about who decided what. They're going back and forth. But from the Carrefour side, their argument was, one, you're charging more, and you're putting less in the bags of chips, in the food. And it's like you're squeezing our clients, or our customers. And I loved, honestly, that they did this. They're fighting for the customers.
Yeah.
And this isn't them making this up. The CEO of Pepsi was literally on CNBC last year talking about putting less product in the bags. He literally was, go look it up. I'm not making this up. He talked
Yeah.
about it, and it infuriated me because I really don't understand why bags of chips are half full,
Yeah.
quarter
Yeah.
full.
Right.
I
Yeah.
couldn't believe when I heard this.
Yeah, so the if Costco, we've talked about this a lot, but Costco and Walmart both said that they're seeing deflation. And so I'm assuming they're talking about foods and clothing and the stuff that they sell the most of. So if they're seeing deflation coming this year, they're probably mostly talking about their imports because they have to have those prices way before they have to have. I sold all these people, so I know when I needed to have a firm price that they weren't not going to let me play with. And it was different for import than it was for domestic. So I'm guessing that the China deflation, which people are talking about China exporting their deflation at this point, that is the number that some of what they're talking about. Well, that impacts domestic because all of a sudden, if you're competing, even not with exactly the same product, but just for shelf space in these stores, then you're going to have to take a look at your pricing in order to make sure you don't lose some of that precious footage, on the shelf. So I can see where it could have a definite cascading effect.
Yeah, no, I think you're spot on. I mean, just again, go to the raw materials. Just look at commodities. Prices are dropping. I mean, the only reason, look, oil is, I guess, holding steady, if you will. And the only reason it's even holding steady right now is because of the conflict in the Red Sea, and all of these vessels having to go around South Africa to get to the Med, to get to European countries. If it wasn't for that, where would oil be right now?
Well, in
We see
Saudi,
what's happening with.
yeah, in
Yeah,
Saudi
go
Arabia,
ahead.
cutting their 2 million cutting their 2 million and now cutting their price because even after they cut 2 million barrels a day, they couldn't hold the price. So yeah, it's they're definitely, that oil patch is under a world of hurt right now.
Yeah. Yeah, it's crazy. And again, none of this should be too surprising to anybody. I mean, to your point, Randy, we've heard it from Walmart, we've heard it from Costco, we've heard it from Elon Musk, who I would argue is probably, you know, has just as well of a pulse on supply chains as Costco or Walmart, but slightly different segment, right? He's dealing more in the raw materials. He's dealing more in, moving larger expensive products. So, but all these CEOs are telling us this. There's a reason for it. And, the Fed will either listen or they won't. I think they're going to posture and say, no, 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 we're waiting, pause, waiting for longer. We need to see the data come in. We need to see the data come in. But I think it's just a lot of smoke and mirrors right now so that they can get to the next meeting and then to the next meeting, et cetera. It's
So,
the same pattern we've seen for 2 years now.
right. So if we extrapolate on that, it gets back to your original comment. You think the Fed will cut sooner rather than later, that they will cut in time, and that will help us to avoid any kind of actual recession.
Look, the market has been more right than the Fed has.
Yeah,
All I can say.
that's a
The
fact.
Fed, back in August, the Fed said that we're going to have another rate hike. The market said BS. Who was right? Now the market is saying that we're going to have a rate cut in March. The Fed is saying, no, we're not. Or actually, they're not even saying that.
Yeah, yeah, yeah.
Actually, they're not even saying that. So I'm not guaranteeing it's going to happen in
No,
March, but it will happen by May.
yeah, yeah.
Promise you that. Unless some drastic thing happens, right, that I can't predict in this point in time. But if things continue the way they are, even if the month over month is just 0.2, 0.2, 0.2, we will essentially be at 2%. Like
Yeah.
it's
Yeah.
yeah.
Yeah, exactly. And Triflation is showing that. Triflation has been now for a week, they've been at 2.15, somewhere around there, up and down a little bit, but right around 2.15. So Triflation is projecting that that's where we are. And so I'm a little bit surprised it's not even lower. And where they're showing the big drop, food, alcoholic beverages, non-alcoholic beverages, tobacco, clothing, personal goods, all the kinds of stuff you buy at Costco.
Yep.
So,
Yep.
yeah. All right. Listen, the markets right now. So I wanted to end on good news, but Tesla is down another 50 cents in the after hours. So they're sitting at 234.40. Who knows what that means for tomorrow? I'm not predicting anymore right now. It's too hard. I would have never guessed that Tesla would have been down today as significantly as it was compared to the rest of the market. It was just a shockaroo. What about you?
Yeah, I'll help you out on some good news to end this.
There you go. There you go.
Last week, maybe, Elon mentioned, in the next 5 years that he thinks that Tesla could get to the market cap of Apple and Saudi Aramco combined. Call that $4 to $5 trillion
Right,
valuation.
right,
So let's just call that $1,500 stock price.
right.
I believe shortly after that, maybe a day or two, don't quote me on my timelines, but he mentioned that at the end of January, post earnings call, that he was going to have essentially a meeting. I believe it was for Tesla and SpaceX, but essentially talking about where the company is going and the roadmap and the future.
An all hands
This,
meeting. Yes.
thank you. Yes. This to me sounds bullish. Um, Look, all hands meetings are very common after quarterly earnings for every company. But he made this public, so I imagine it's going to be, I don't say televised. It's going to be X-televised. It's going to be live on X. I don't know what the word
Right,
is,
right.
but it's going to be live. I imagine it's going to be live on X. And you don't do something like that and talk about a $1,500 stock price unless you're pretty bullish. And this is coming from a man who doesn't sugarcoat it. He said last earnings call that he sees big problems. But I think now with the Fed talking about rate cuts, I think Elon's like, okay, I can see the light at the end of the tunnel. We don't want to start things up when we get at the end of the tunnel. We want to start getting things going now. And I think that's what he's seeing. I don't know if this is true. This is, again, just
Right.
one random guy with the white wall behind him speculating. But I think that his sentiment is changing. I think he smells blood in the water with GM, Ford, Volkswagen, everybody else. I think he knows what's going on with Optimus and FSD.
Yep.
I think he knows what's going on with potential leasing agreements with others. And I think that he's ready to, step on some necks and, you know, lift off.
That sounds about as good as it can get. I'm now I don't even want to do the rest of the report here, but oh well. Additional good news. We've got the 10-year down almost a full basis point. Well, nope, now it's only 0.6 of a basis point in the after hours, and pretty much all the longs are down that much or more, including the 2-year though. So it's down more. It's down a full almost 2 basis points. So that's a little closing of the inversion. I was talking to Larry last night, and the theory is, that's another one of the issues I'm thinking about with regard to recession, though, is that when the inversion reinverts is actually after the recession starts. So we've got 18 months now, longest time in history of this inversion. And when that starts to go the other way, that's when you're actually in the recession. So that's an interesting point.
Yeah, the problem with all those, all those data points is there's so many of them. None of them have been 100% accurate every single time. And every situation's different, right? Like the Great Recession, right? That was just a crazy time, right? I mean, cats were getting mortgages, right? It was just bananas out there. Um, during the dot-com bubble,
Yes.
like that was just insanity happening. Even this time, right? Everything we've seen is a result of shutting the entire world down and
Yes.
then trying to bring it back up and overstimulating, putting too much slack into the markets and then trying to take it out. And a new president comes in and, well, he wants you to get a check with his name on it as well. Whether we needed that or not, the point is it just induced more slack into the economy. And so to think that just a yield curve inverting, that tells us everything, I don't know. I just don't buy it. I think there's nuance and situations that are different every time. How is the Fed raising rates? How are they cutting rates? What's the demand out there? Well, before now, I mean, if you look at anything, technology gets adopted faster, innovation happens faster, everything's on exponential growth. GDP is growing exponentially. How does that affect these
Right.
things? Does
Right.
that affect these curves when they're inverted or not? I would think they do. We're going from a manufacturing economy back then to now a more consumer services economy. Does that affect it? I imagine it's another variable in there. So there's just so much that
Yeah.
I'm not even thinking about right now. So yes, yield curves are inverted.
Yeah.
Yes, in the past it's been signal, but doesn't mean that it's going to happen again or that's the way it's going to play out. And so far up to this point, nothing has played out the way it has in the past.
No, that's a fact. It's been a very well, except for the boom busts, in my experience, in the bicycle industry. Everybody know, most people that follow me know I was in the bicycle industry, which is famous for boom busts. And so I've been through it a bunch of times, like 9, 10 times in my life. And the boom busts always play out the same. The only thing that's happened this time, I was talking to a bicycle dealer earlier today, and the only thing that's happened this time that's different is that I would have expected the bicycle industry and the rest of the, things like refrigerators, these durable goods, the discretionary purchases, I would have expected them to come back this year. But they have to come back sometime. In every boom bust, eventually people have to go out and start buying that product again. They don't have the latest, or they don't have the one they want, or theirs broke down, whatever it is. So maybe it'll be this year that the durables will finally come into play. But that's the one thing that has been on the boom bust cycle that I've seen replay over and over again that was different this time.
Yeah, but again, like if I were gonna throw in another variable, right, that's different this time, is house prices are insane now, especially if you throw a high interest rate on there. And I understand, like, people, like Randy, I'm sure you've said this to someone before, like, oh, these rates aren't that high. I remember when they were 15% or whatever, which is true. But you didn't see 15% on a
Right,
$1 million house, right? So at the end of the day, the house payment
yeah,
proportional to your take home is insane right now. And so that means people need to save even more for a down payment and for a potential monthly payment.
right,
And so maybe that takes into effect on why people are saying, all right, well, let's just repair the refrigerator instead of buying a new one. Well, let's not buy the bicycle. We're saving it for a house, or
right,
maybe we're just trying to cover our rent at this point.
right, right.
Right. So it's like there's so many variables. It's
Yeah,
you
yeah.
never know.
And now see, you're bringing in my big variable that I talk about all the time that nobody pays attention to, demographics. It changes everything with the aging baby boom and no kids being born. All the demographic information is going to change everything about how people buy homes, when they buy durable goods, when they stop buying durable goods, how they play the market. People that are 55 or 60-year olds don't play the market the same way that a 35-year-old does. So
Yeah.
all of those things need, and people just, I mean, it's hard, as you point out, you almost need a supercomputer to be able to figure out all the different possible ways that things are changing. But your point is extremely well taken. Oil is down a little tiny bit in the aftermarket, $72 though. We talked about that. We've got these conflicting
72.
issues. So,
That that's crazy though. 72? That's actually lower than I thought. I thought it was at 78 right now.
oh, you may be thinking
72.
Brent. Are we talking about two different? So Brent is at 78.
Oh, okay, okay.
West,
That makes
West
more
Texas
sense.
Intermediate is at 72. Now that's a larger split than normally. It's
Yeah,
normally,
I was gonna say,
yeah,
reading my mind, I was
yeah,
gonna say that delta is a lot larger. Normally it's like $3 to $4. That's a $6 delta. Like
yeah.
that's a lot larger.
Well, there's your Red Sea. Okay. So you got your Brent, which is Red Sea, that's affecting that price. So if that settles down, then Brent probably drops to its normal delta. Natural gas, I keep looking it up. I keep looking for somebody to tell me why the thing has been just leaping all over. I mean, up 5%, down 4%, up 5%. It was up huge yesterday and then down in the after hours. And anyway, it's up 80, up almost a full percentage in the after. I'm sorry, down almost a full percentage in the after hours, but it's low by historical standards. Dollar is flat. So then should we talk about what happened to Bitcoin today?
Yeah. Yeah. Let's talk about it. I'd be fascinated to hear your take on it.
Well, I don't know what it's like all of a sudden I'm looking at it. I didn't even know yet. And I'm just going through and looking at where things are. And I'm looking at Bitcoin and it's, falling like a rock. And then I go on Twitter or X immediately and I see where people are saying, oh, the FS, I always, the three letters, the E,
SEC.
yeah, that has been, SEC has made their decision, and the ETF is approved. And I'm like, then why is it falling? Well, okay, that could be because it's sell the news. And that made sense. And then 10 minutes later, it's like, oh no, this was a hack. Oh my
Yeah.
God. So it's now at 45.9, 46. It's kind of where it was.
Yeah, that's wild. I will say this could very easily be the year of Bitcoin, where we see 90, $100,000 Bitcoin. It could also be the year where it's like, all right, well,
Whatever.
Bitcoin's just going to hang out here. Yeah, I mean, it's possible because you got to wonder, was this run up in Bitcoin pricing everything in already,
ETF and the
or yeah, or is there more? Um, I think the halving event will have more impact because it just creates scarcity.
right.
Um, so I think that's going to organically help it become more valuable. Um, but yeah, I don't know. I wonder if with the ETF, if I mean we'll see because I'm not sure how that works as far as them purchasing Bitcoin and how much they have to have, and how. Yeah, I'm not sure how that works, but it's gonna be fascinating to watch. I mean, this is literally gonna be something that's in the history books
Right.
for economics. So
Oh,
it's fascinating to live through it.
Oh, absolutely. Yeah, we're living in very interesting times.
We are.
It's part of the fun of having this channel and having written the books on Elon is I'm basically chronicling, as you said, the most influential person on earth at this point, and probably will have more influence 50 years in the future than any other human. So, okay, so we've got the Dow down 7 or 0.02%, so call it flat. S&P future up a buck, so call it flat. And the NASDAQ future up 15. So, oh, wait, the NASDAQ might be up more than flat, but not much more than flat. That's 0.09%, up 0.1% as 2 seconds ago. Anyway, so looks like the equities markets after hours are not really giving us much directionality for tomorrow. We got a lot of stuff coming up, but one of those might be the ETF tomorrow. So we can replay today. It could be Groundhog Day tomorrow.
Yeah, I think t- Bitcoin aside, I think the market's waiting to see what happens Thursday.
Yeah,
I think that's what they're waiting for.
or maybe
I
even
think it's
Friday too, because the banks, you got the big four banks with earnings on Friday. So they might actually combine the two, the CPI, the PPI, and the banks all being okay. That gives us some feeling of security.
yeah, yeah, that'll be interesting because I feel like the banks don't want rates to come down,
Yeah.
right? It's almost a counter to what they probably want. Um, but yeah, I think it's all about the CPI.
Okay.
And again, it's not like it's a big day or anything, but it's just like another hammer whacking on that nail,
Yeah.
right? And it's just yet another one and another one. Wow, sound like DJ Khaled. But it's just further confirm that inflation is dead and that the Fed's done enough and that they're doing too much at the moment. So I don't know. You think that there's a 50-50 chance for recession now.
Yes.
W- Why? What's driving that? Is it a Fed mistake? Is it companies just not having enough demand? Like, what's triggering that? Do you think, or what would trigger that?
Okay, so part of it is what you were talking about earlier when you were talking about the CPI reports not being able to hit the last year number, or the last year number being high, therefore making it easier for them actually to beat or to be down at 2%. Well, we got the opposite problem with that third quarter. And part of the reason why we had the big third quarter was because of all the stimulus from the government with the infrastructure act and the huge amounts of stimulus. And one economist was saying that might have been 4% of the 5.2% for the third quarter. Well, that stimulus is still going to be there this year, but it's not going to increase.
Hmm.
Be more. So we've got the year over year problem. How do we get more than 5.2%? Or, how do we get more than that hill? How do we get even a higher hill in the third quarter? So then you add to that the things you're talking about, some of the layoffs, a little bit more softness in the labor market. Because my reason for saying last year that there would not be a recession was we had 1.9 job openings for every one person looking. Well, that's down to 1.4 now. And if it gets down to 1.1 over the next 2 months, maybe it gets to even, maybe it gets past even, which would be normal. Okay.
Yeah.
But it's the directionality that I'm looking at to where at a certain point, because one of the reasons it stayed so high is because a lot of these major companies and even smaller companies have held on to employees they didn't need. They've held on to employees because they were afraid they couldn't replace them, and that people were jumping ship. The great leaving, if you will. So now I think these employers are going to be like, no, we can't do that anymore. We have to take more risk on cutting that payroll rather than holding on to these people. The risk is going to be on the side of earnings as opposed to and margins.
Do Do you think? Let's say that all this pans out, and we start to approach that Q3 and the Fed has started to cut aggressively, do you think they start to stimulate the economy?
Well, I think they would also have to start quantitatively easing again, because part
Well,
of it,
that's what I'm saying, stimulating. Yeah.
well, they'd have to do both. They can't just cut the rates. They got to also start buying bonds again.
No.
So that's going to be another piece of it. Um, yeah, the question, as you well know, is how long does it take for the effect? So if you don't start doing anything till May, the effect of it is going to be in January.
Yeah.
So now you might stimulate, you might tell the market, we know the market operates 6 months ahead. So we might see right now that what's happened these first 6 trading days, maybe that is a 6 month projection. That's the crowd betting that there's going to be a recession in the third quarter. And maybe by the time we get to the third quarter, the market is starting back up again, because they're now projecting that in January, all is going to be well. And a change of government is almost always a stimulus for the Fed. So if things continue to pan out like it looks like they are, and we have a change from the Democrats to Republican, then that would also be a big stimulus to the markets in the second half.
Interesting.
Yeah.
Yeah. Yeah. I think we are. I know it's been a tough. I mean, it's been a tough 2020s, I guess you could say.
Right.
But I think we're on the precipice of a nice long stretch.
Oh boy.
Um, yeah, I mean, if you think about it, like even we're going through the Great Recession. That was a rocky. You could really even go back to like '06 maybe, but that was a rocky, 4 or 5 years.
Yeah. Yeah.
But then we just had a nice bull market, for, GDP wasn't exceptional or anything, but yeah, it hit 2% every year under Obama. And we had a nice steady rise in the stock market, right? In the equity markets. And that's normal. It's
Yep.
normal to see these long bull runs after very turbulent times, right? The sky tends to clear after a bad storm. And the way I see it, we are definitely closer to the end of the bad storm and into this nice stretch. And it's one of the reasons why, when people ask me, I always get texts when Tesla stock goes down, and of
Yeah.
course I got texts today, like, oh, why is
Right.
it going
Right.
down?
Right.
It's like, why does it matter? Like, nothing's changed. Do you think something changed day to day with the company that's so drastic, so severe? No, of course not.
Yeah.
So, I think staying for the long term, understanding where we are in the cycle. We don't know where we are. We know we're not at the beginning. We have pretty good confidence we're not in the middle of the storm. And so I think there's a lot of optimism to be had. And I think the Fed screwed up really bad to begin with. I think they'll do their damnedest to make sure they don't screw up terribly again. And yeah, I think Q3 may be a problem, like you're saying, because we're lapping it. But apparently it takes more than two consecutive negative quarters. Apparently it takes.
Yeah. We changed the definition. Whoops. I think you just froze. We were so funny together that you
Tell
actually froze, and there you, well, you're trying to come back. So while you're still frozen, I will continue that we have also huge productivity gains coming, and that generates wealth and also always helps markets. So that could be the real success that we're going to see coming up here shortly. Well, I'm sorry, you seem to have frozen forever. And so we're at the end anyway. So I will just thank you in absentia for participating today and helping me bring in a lot of good news. You were good at it. You found a lot of good news. But I think we'll say goodbye. and 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 yes, and thank you all. It's been great talking to you.